Hi, my name's Walter Montero. I'm a real estate and mortgage agent here in Cambridge, Ontario, and I've had the privilege of serving our community since 1987. Over the years, I've met some great people here in our community in many different businesses and walks of life. Some, of course, are well known, and others are some of the best kept secrets in town. So the purpose of this podcast is to share and introduce them to you. Welcome to the I Love Cambridge podcast. I just want to start off by, first of all, introducing you. You are Mike Braga. You're a trustee in bankruptcy with BDO, correct?
That's right.
All right, perfect. So tell us a little bit about yourself and what you do.
Yeah, so I'm a licensed insolvency trustee with BDO Canada Limited. We're a full service accounting and advisory firm here in the region. And so my role is to advise people when they come onto struggles financially, advise them with respect to plans and how to get out of debt in a way that's appropriate and really realistic for their situation, because everybody's debt situation and story is different. And so some people just need a little bit of relief, so tweaking of budgets and that type of thing. And then we have other individuals who, because of circumstances and the fact that life happens, they find themselves up against the wall, and so they need somebody to help them to cross that threshold and come up with a plan to get out of debt. And that's the service that I provide. I've been doing that for the last 19 years.
Okay, great. So when we talk about bankruptcy, and from what I understand a little bit about your business, I don't know a lot about it, but that's usually a last resort for you guys, isn't it?
That's absolutely right. So there are other options that we look at first. And so, oftentimes when people come to our office and they think they're in dire straits, we look at their situation, we look at their assets and their liabilities, and we see, okay, well, actually, you've got a little bit of equity that in your property that you can deal with. And so in those types of situations, we refer them out. And it's just, so part of our job is education and going through all of the various options. And as licensed trustees, we're required to do that. So it's not as if coming to us, you're going to be put into a bankruptcy situation when it's not appropriate for you, because the government doesn't allow for that. And so, there's that consulting piece, but then there's also the statutory options that we provide as well. Okay,
perfect. So now let me ask you, with regards to dealing with these types of issues, I see a lot of times a credit proposal is usually something that's considered ahead of a bankruptcy.
That's right.
Okay. Yeah. So how does one decide between going the route of a credit proposal or a bankruptcy? How do you decipher which route to go when you do that?
Yeah, so we do a complete assessment. So we look at an individual's income, expenses, their assets. And then there's a couple of reasons why you would want to do a consumer proposal. So maybe you are a higher income earner and you want to fix the monthly payment that's required. And so a consumer proposal allows you to do that. And so what a consumer proposal is, it's a payment plan to the creditors at a reduced rate. So you're basically going to them and saying, look, I can't afford to pay the full balances of the debt that are outstanding, but I want to pay you something over a period of time that can't exceed 5 years. Okay. And so that's in a nutshell what happens. And so we look at their situation, and we figure out what would creditors get in a bankruptcy situation. That's the lowest threshold. And so then, the consumer proposal needs to offer the creditors more than that. And the advantages to doing something like that is that it freezes the interest. So there's no additional interest that's occurring every month. And you're actually accruing the payments over a 5-year period of time. So it gives you a lower monthly payment amount. But there are downfalls, and that's when we start looking at the hit to credit rating, which is significant. So when you're doing that type of thing, you need to keep in mind that in order to qualify for mortgaging again after doing a consumer proposal or bankruptcy, you need to reestablish your credit. So, this is a long time repair situation that you're looking at when you're looking at this type of option. The other reason why people want to do a consumer proposal is they have assets they want to protect. So they may have equity in their property. And they don't want to touch the property. They want to maintain it because they've got a family and children. And so they don't want to move or anything of that nature, and they can't access the equity that's in it. So they offer their creditors a proposal that says, okay, I know my equity is about this amount in my house. So I'm going to offer you this and offer you an equivalent amount as cash over the 5 years. And so creditors are amenable to that because, there is some security and there's a trustee that's monitoring the payment progression.
Okay. And you've touched on the 5-year threshold several times there. So can that can that proposal not exceed 5 years? Is that the idea here?
For an individual with less than $250,000 of debt, they file what's called a consumer proposal typically, and that 5-year threshold is the maximum amount of time that the law provides for. Because the government, the legislator, when they were drafting the framework, wanted people to have this remedy available to them, but they didn't want it to go so far as 10 years because now you're disenfranchising the creditors. Creditors do want to get paid, and they want to get paid in sort of short order. So they figured 5 years was a reasonable period of time.
Okay. And then how do you decide who gets paid and how, and in what pecking order, so to speak?
So that's the beauty of the legislation. The legislation indicates that directly. So basically, a consumer proposal is done to all of the unsecured creditors as a group. So, so we're not really touching mortgages or car loans or those types of things. Yeah. And so we treat them all equally. And so creditors get paid out of the pot that's available based on the percentage of the debt that they hold. So if they have 10% of the total debt, they're going to get 10% of the pot at the end of the day.
I see. Okay. And then they have to come to an agreement, I guess, right? This is
That's
something
right.
that, yeah, I see. Okay.
Yeah. So what happens is when a consumer proposal gets launched, it gets circulated to all of those unsecured creditors, and they have 45 days to vote on it. Now, if we get at least half of the creditors by dollar value saying yes, the consumer proposal is accepted, and it's binding on all of the creditors. So one small creditor saying no doesn't tank the proposal. It's still accepted, and that small creditor who voted against is still bound by it, and they will still only get the percentage. So again, that's another advantage of doing the consumer proposals, because you're negotiating with the creditors all in one shot, not in a piecemeal service.
I see. Okay. So now let me ask you, with regards to bankruptcy, do you lose everything? Like when you go bankrupt, do you lose everything?
Absolutely not. And that's the thing that individuals need to keep in mind. And it's why many people don't seek my services, because they think of Trustee, oh my God, I'm going to lose everything. But there are many assets that are protected. So if there's equity in your property of less than $10,000, that equity is exempt now. So that's a new change to the legislation that came in a couple of years ago. You're allowed to have a property that you own free, you're allowed to have a vehicle that you own free and clear, as long as the value is less than $6,600 in value. Okay. Your RSPs and locked-in retirement accounts, those are also protected with the exception of amounts that you've contributed in the last 12 months. And that's important to note, because one of the first things that people do when they run into trouble is they start collapsing all of their investments to pay down their debt. And so what we encourage people to do is, before you think about doing that may be a good strategy, especially if you want to salvage your credit report. But before you do that, seek the counsel of somebody. A licensed insolvency trustee is my recommendation, so we can go through all of the options. Because if you're inevitably going to have to file a bankruptcy proposal anyway, there's no point in draining your RSPs. Save those for your retirement. Yep. Household items, personal items, those are protected as well. And so those are the main exemptions. The one that's not protected that people often are surprised about is the Registered Education Savings Plan.
Yeah.
So if you're investing in an RESP and you're going through a bankruptcy situation, that can be seized for creditors, and people need to keep that in mind.
Okay. And is a bankruptcy ever denied?
It's not denied. So as long as you have more than $1,000 worth of debt and you're unable to make your payments as they become due, you qualify to file a bankruptcy in Canada. Those are the minimum thresholds. I'm not suggesting if you have $1,000 of debt, you need to file. But those are the minimum requirements. What can be opposed is the discharge. So when you file a bankruptcy, there's a process. And during that 9 or 21 months, during that first time through the process, there's certain responsibilities that you have. If your creditors, for some reason, have some form of objection to your filing, so you've committed an act of fraud, something of that nature, or there's some suspicious activity on your account that they want clarification. If they don't get those answers through the trustee, they can oppose the discharge. So at the end of the 9 months, they can ask the court to review the discharge process. And at that point, it goes before a registrar in order to get that settled. That's very rare. Usually what happens is that, creditors voice their objections to the trustee. We have investigative power, so we use those in order to get resolution before it even gets to that point.
Now, a question for you, just something that sort of popped in my head, not that it would really happen, but I mean, it could happen, is if somebody's in the middle of a bankruptcy, they're,
Mhm.
they're going through the process,
Yep.
all of a sudden they win the jackpot, they win a
Yep.
lottery. What happens?
Happened. That certainly has happened through in my 19 years here. So we had somebody who won the encore, and at the time it was $250,000. In a
Yep.
bankruptcy situation, that's considered an asset. So anything that you might come into, lottery winnings, severance packages, inheritances, anything of that nature, those dollars come here for the creditors. And so if there's enough to pay off the creditors in full, great,
Yep.
do so.
Yep.
There's a little bit of interest that gets calculated, but the remaining balance gets returned to the individual.
Okay. Yeah. Okay. Now, is there any debts that cannot be included in a bankruptcy?
There certainly is. So anything resulting from fraud does not get cleared. Support amounts outstanding, student loans less than 7 years old. So those are the main ones. People often think that Canada Revenue Agency debt, so your back taxes or your GST that might have accrued, can't be included in a bankruptcy or consumer proposal. That's false. It can. And many people have to file bankruptcy because it's been a number of years
Yep.
of non-filing taxes, and then the debt becomes due.
Okay. Now, are there any privileges that are lost, just besides the ability to borrow money? Are there any particular privileges that are lost as a result of declaring bankruptcy?
So if you're the director of a corporation, you have to resign as the director. Or, in some situations, if you're acting as a fiduciary, so if you're a lawyer and you're holding trust accounts, you're unable to do so while you're going through the bankruptcy process. Once you get your discharge at the end of the 9 or the 21 months, you can resume those roles. But for that period of time, you do need to resign as director. But in terms of other restrictions, so people often ask me, can I travel? Can I go outside the country? Not a problem at all. You just need to keep your trustee informed so that if they need to contact you, they can.
Sure. Okay. And then once the bankruptcy is over, are they completely off the hook?
No. So the bankruptcy, as I said, is a process, 9 or 21 months for the first time through. Once they receive their discharge certificate, that bankruptcy will stay listed on the credit report for an additional 6 years from that date. Now, that doesn't mean that they're not going to be able to obtain credit. It's just going to mean that it's going to be difficult to do so. And they do need to start reestablishing right away in order to get back and rehabilitated. And so part of the bankruptcy process is the attendance at counseling sessions where we talk to people about doing that. And so the standard or the threshold that people often use in order to know if they've rehabilitated their credit rating is, when will I qualify for mortgaging again? And so usually what I tell people is you need to have at least 2 years of reestablished credit after you get your discharge certificate. So, you could be looking at 3 years of being in a penalty box before you qualify for that type of debt.
Okay. Now, what about married couples? One declares, the other doesn't. What are the implications to either party?
And that's an important question, Walter, because many people often think, well, we're married, so all of the debts are each other's, and that's not the case at all. So in Canada, debt is separate unless you actually co-sign or apply for a joint account. Your debts are not the same as your spouse's debts. So oftentimes we have situations where a couple comes in thinking they both need to file, and when we go through the list, the majority of the debt is just in one spouse's name. And so in looking at that, one spouse can file and clear up their debt, and then the other one maintains the credit rating. And so that often is a good strategy for couples if they can manage it, and depending on what the split of the debt is. But that's extremely important to note. That's the same with assets as well. So, assets are treated separately. And so if you have, for example, if you are the RESP and your spouse files bankruptcy, your RESP, if it's in your name, doesn't get touched. So there is a separation in Canada between spousal assets.
Okay. All right. Now, does it cost money to go bankrupt? Like, what are the costs?
It absolutely does. So the government has set out a series of guidelines based on family size. And so if you're making below the guideline that the government has set out, there's a base bankruptcy fee, which typically for a first time through the process is about $1,800. And that's standard across the industry. If you're making above that guideline amount, and to give you an example, for a single individual, if you make more than $2,200 a month net, 50% of your income above that $2,200 needs to be contributed for your creditors.
Oh,
And
okay.
so, yeah, so the government is saying if you're a higher income earner, and again, the threshold for high income is very low, because $2,200 is not, for a single individual, is not a lot.
Sure.
So there is that component. What it also does is once you start exceeding that threshold, your bankruptcy gets extended from 9 to 21 months, because the government again says, you do need to contribute because you're a higher income earner, and you should contribute for longer because again, there's a fairness component that they're trying to balance out.
Okay. Now, south of the border, this is where I normally hear these numbers like Chapter 7, 11, 13,
Right.
all these different breakdowns. Do we have that here in Canada? Is that the same or not?
It's not. So we call it a bankruptcy or a consumer proposal. The chapters that you're referring to are sort of similar, except in Canada, we have a more self-help type system. So if you were to file bankruptcy or do a sort of informal restructuring in the US or formal restructuring in the US, it's a very heavily court-driven process. In Canada, that's not the case. You would seek the assistance of a licensed insolvency trustee such as myself. And we would guide you through the process, and the court is not involved unless you're not fulfilling your responsibilities.
I see.
And so again, it's more of a self-help model, and again, it's really a process that the Canadian government has recognized that happens, and people do need some relief when they get into these types of situations. So they've really made it a little bit easier in order to get through that process and get back on the other side.
Okay, perfect. And you've got something cooking with Rogers. Tell us a little bit about that. What's going on there?
Yeah, so part of the component of working at BDO is we do a lot of education, and so we go into the community and try to be a solution to the problem, not just fix the problem. So try to prevent bankruptcies and consumer proposals from happening. So I've been frequently appearing on Rogers in their in-studio program, and then the idea came up that, hey, why don't you launch your own show, a financial literacy show? So last night was our debut, or the 8th, October 8th was our debut episode of Money Matters with Mike Braga. And so it is a financial literacy show where we ventured to ask all of those money-related questions that you've always wanted to, but you were afraid to. Because, money is still a able topic. People are afraid to ask the questions. And so, we're venturing to talk about those things and get rid of that stigma. So our first episode focused on the credit report and just trying to understand what it is, how to go about reading it. And then our future shows will be talking about things like, so you want to be self-employed, what are the pitfalls and that, you're buying your first home. How do you approach it? Because many people kind of look at it backwards. They put out the list of all of the wants, they want the granite, they want the hardwood floors, but they don't think of the budget beforehand. So we're going to be talking to experts to think about, okay, how do we look at this differently? How do we look at it from a financial perspective so we have that foundation so we don't get into the debt?
Yeah, perfect. So last night was Thursday. So is it going to be on Thursday night? Is there a particular night that the show is on, or?
Yeah, so there's 2 new episodes every month. So bi-weekly, there's a new episode on Thursdays at 8, and then it repeats. It repeats throughout that 2-week period. So if you miss it on the debut night, it does repeat. So check your local check your local listings. It's on Rogers 20. Money Matters with Mike Braga.
Okay, perfect. And then do they upload it to YouTube as well, or no?
They do stream it through their website, so you'll be looking for updates there. Yeah.
Perfect. Very good. Excellent. So if somebody wants to get a hold of you, how can they reach you?
Our number here is 519-570-4000 or through the web, debtsolutions.bdo.ca.
Excellent. Now, is there any question that I didn't ask you that I should have?
I think we've covered it quite well, actually.
Good. Well, it's always an intriguing topic to me. Being in the mortgage side of things and real estate, of course, a lot of times, you're proposed with these different questions, and I've always been very quick to refer it off to a professional. But it's always a very intriguing topic because, let's face it, especially with the changing times, and especially with what COVID, who knows what COVID has in store for us. I have a feeling we're we're going to be seeing a lot more of you guys than we probably want to.
Yeah, I think we just launched this is our third annual affordability index, and the results are actually being launched next week. And what we found in doing our poll is that there's actually been a gap. So there are about 40% of Canadians that we polled actually are showing that right now they're struggling even more than pre-COVID. And that's an interesting statistic, because what we've been hearing is that actually debt is on the decline. And so for people that really weren't impacted job-wise from COVID, they were able to save because all of their discretionary expenses were gone. We were, because of the lockdown, we weren't doing anything, right?
Yeah.
And so if you were a higher income earner or didn't have a disruption, you were able to pay down debt and get rid of a lot of it and pay down your mortgage even quicker for many people. But there's this 40% that are, they were working in the entertainment industry, hospitality industry, or their hourly wages, and they didn't know when they were going back to work, or they'd go in for a day and off. And so they're really hurting right now. And when the CERB benefits and the government incentives stop and the collection agencies start collecting again, we anticipate that there will be an uptick in filings, unfortunately.
Yeah, I bet. Mike, thanks a lot for your time. You're a great guest. Your information was awesome. We're going to share that with our group, and I hope to see you around.
Thank you for having me.
Okay, you bet. All the best to you.
Thanks.
And that's it, Mike. So after that, we'll get it all edited, and then as soon as it's up, we'll send you an email, and then you can do whatever you need to do, share it with your social media or whatever you'd like to do, and we'll share it with our audience as well.
Sounds great. Perfect.
Okay, awesome.
Thanks for having me.
Okay, no problem, my friend. You take care. Happy Thanksgiving.
Yeah, to you as well. Say hello to Karen.
I will, for sure.
All right, take care.
See you later. Bye-bye.